Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Boothra, and the top stories at 1:30 p.m. are Midcap trade flat amid a volatile session on weekly expiry day as Adani Group issues linger and uncertainty continues. Metals, realty, banks weak. IT ekes out some gains.
Cummins jumps on a strong all-round performance. The management says it is confident of meeting its target to grow at 2 times of the GDP in FY23 and eyes double-digit expansion in exports.
Uno Minda surges in the back of a stellar Q3 and strong outlook. The management tells CNBC-TV18 they expect to outperform the industry growth and also achieve their guidance for FY23 despite headwinds.
A sharp contraction in margin hurts Piramal Pharma. The stock is now over 50% from its listing price. The street will closely track its conference call later today.
MRF tumbles after its third quarter earnings miss. Margin remains steady on year-on-year basis despite a 15% revenue growth.
And dominance continues. CNBC-TV18 knocks out competition and emerges the leader on budget day with 88.2% viewership during the FM speech and 89.8% viewership throughout the budget day on the 1st of Feb. A big thank you to all our viewers. All right, those are the top headlines, of course, on Midcap Radar, and we are tracking a lot of market moves for you as well. It has been a day which has seen greens and red as well, and for this particular moment, we are seeing the Nifty has recovered from the low, so it's down 15 points as we speak, and it is courtesy a couple of these names. We have Apollo Hospitals, which is surged from the lows. IndusInd Bank is the one, ICICI Bank. So banking names are the ones which are seeing some recovery, and that is leading to recovery in the Nifty as well. Midcap index too, after briefly being in the red, has turned green, so that index is up around 10 points. But the sum and substance is, Reema, so far we've seen some volatility, and Nifty is consolidating at those levels of 17,800, 17,900.
And the banks are underperforming for the second day in a row. Yesterday as well, while the Nifty surged 150 points on the index level, the banks were just up close to about 50 odd points. And today as well, the Nifty bank is down close to about half odd percent. It's the insurance companies which have made a big comeback post the budget day lows. So take a look at something like HDFC Life. The budget day low last week was about 480 thereabout. It's now climbed to levels of about 520. Pull up a 1-week chart of HDFC Life and you would see the continuous up move that we've seen. SBI Life is the other one. The budget day low was roughly below that 1100 mark, and now it's at 1180. So these are the stocks which have made a big comeback, and one of the big movers of this week is Bajaj Finance. 7.5% gain on that heavyweight. So that's a big mover. But let's talk more about the market technicals and the way forward. Dharmesh Shah of ICICI Direct now joins in. Dharmesh, afternoon. What have you made of the day so far? Any interesting trends that you could pick out for us and your stock ideas?
Yeah. So good afternoon, Reema. Yes, definitely. I think so. Market has been trading in this range of 17,800 to 17,900. We believe, I think so, 20-day moving average and the budget day high, which was around 18,000, remains to be the very crucial resistance for the Nifty, which we expect gradually to see upside momentum once 18,000 is getting breached on the higher side. So we believe, I think so, buy on dip should be the strategy. Short term to talk for, I think so 17,600 remains to be the very strong support which we expect to hold. So any dip towards 17,750, 800 should be looked as a buying opportunity for target of 18,000. Okay. This has been a short term. But again, I would say that looking at the screen and looking at the way the market has been behavior for last few trading sessions, it looks like that after all this negative news, market has been holding 17,300, 400, which is again a 52-week EMA, which has taken support in last week. We believe, I think so, going forward, things should get positive for the market and we should see a gradual up move towards 18,300 to 18,400 for the Nifty. So buy the dip should be the strategy. Now coming to the stock specific, again we remain to be positive for infra space and capital goods space, both remains to be the positive as the way the capex spending allocation has been done by the government in the budget it looks like two sectors remain to be the outstanding performer, remains to be the capital goods and infra. So in the infra space, we remain to be positive for Nagarjuna Construction. Now the stock seems to be witnessing a breakout of the last 3 years of downward slanting trend line resistance, which seems to be placed at around 93, 94. We believe, I think so, the stock and looks like an end of the corrective phase and likely to see a target of 108 for Nagarjuna Construction, keeping a stop loss of 83. Second stocks remain to be the ABB with a time frame of 3 months, where again the leader in the technology solution where software is getting connected to is electrifications and robotics and motions. We believe, I think so, for ABB again the stock has again seen a good base formation, and if you look at the current chart, I think so the falling channel breakout has been witnessed in ABB, where again the stock seems to be looked for a target of around 33.50, which is again the October 2022 high. So we feel, I think so, ABB and Nagarjuna Constructions are the two stocks where we will see a momentum in the coming days.
All right. Okay. Thank you, Dharmesh, for joining us and taking us through your technical trades. With that, we'll slip into a short break. We'll get connected with Nikhil Kumar, who's the MD at TD Power Systems, to discuss their Q3 results, which were very strong. Stay tuned. Welcome back. Still tuned into Midcap Radar on CNBC-TV18. Well, TD Power Systems posted a good set of Q3 numbers with a healthy operational show and also clocked nearly 40% growth in order inflow in the first 9 months of FY23. Profit remains steady over a year-on-year basis for the third quarter. Nikhil Kumar, who is the MD at the company, is joining us now to discuss the earnings fine print and the outlook going forward as well. Mr. Kumar, good afternoon. Thank you so much for joining us. Well, you know, it's been a healthy growth in order book in the 9 months. You have clocked in order inflows of 616 crore rupees, which is a growth of 37% on a YOY basis. You had earlier told us that order inflows of around 750 crore rupees is what you're expecting in FY23. Looks like you'll exceed it. So tell us, what are the order inflows looking like in Q4? What will the total order inflow look like in this year and the order book as well?
Yeah, so I guided earlier for around 750 crores of order inflow. We are certainly going to cross that number since we already reached 613 crores. I can't give you the exact number, but it's going to be well in excess of 750 crore. It's going to be 800 crore plus for sure.
800 crore plus, and that would take your order book. The order book is around 1,378 crore rupees. You can end with around 1,600 crore rupees this year.
There'll also be the execution that we'll have in Q4, which will deduct from that number. So I think we will end the year with something like 1,400 crores outstanding order book. Out of that, of course, the Indian Railways, the business that we have with our railway business, the 850 crore. So for the generator business, we will have something like 550 crore opening order book for next year, which is a really, really healthy situation. And it gives a leading indicator of what we can achieve next year.
Can you talk a bit about Turkey? I know last time you indicated that due to lack of sufficient business and deteriorating economic conditions in Turkey, you are planning to shut down that subsidiary from 30th of April 2023. But as you do that, is there going to be some write-off that the company will have to
we have reduced the manpower gradually. We have some assets sitting over there. It's not substantial. It's about 10-15 crores. So we're not going to shut it down. We're going to suspend the operations for a year, and we're going to see how the economy shapes up over the next 1 year, and then we'll take a final decision next year around this time. I still feel it's a good market to be in. It's a power shortage market, so I think they will come out of their problems. They have the election coming up this year, and there could be stability coming in government policies. They also have a lot of reconstruction because of the earthquake. I'm optimistic about the Turkish market. But at the moment, suspension, final decisions towards the end of this year.
Okay. Exports on the whole is about 60% of your revenues?
Export is about 60%. That's right.
60%. And any markets in the export, which in your overseas region, which are under pressure? Would you like to just talk a bit about that?
Well, we generally export all over the world, right? So we're not seeing any particular segment of the market which is under pressure. Many of our European OEMs to whom we sell to are banned from selling to Russia. So that is putting some pressure on, not having access to the Russian market through the European side of our business. Other than that, in general, we're seeing all markets doing well and good, very, very strong order inflows and inquiry levels for next year. So very optimistic about what the prospects for the company for next financial year and beyond.
Okay, so what is the margin difference between export and domestic orders? Is there any, do you get better rates in the export markets?
Slightly better. Overall, we have a gross contribution of about 31%. We want to take it to 32%. But overall, export business is more profitable than the domestic business for sure.
Your gross margins have improved. I think in Q3, it's in excess of 33%. In the comparable quarter of last year, it was 30.5%. What explains the improvement in gross margins? And can you guide on the gross margins and EBITDA margins, which are around 16%?
So last quarter, we had a large number of aftermarket jobs. So which are highly profitable for us, and that's improved the gross contribution, above the normal, I would say, trend line. We will end the year around 31, 32% on gross contribution. Going forward next year, I expect it to be around 31, 32% once again. Most of the EBITDA margin gains will come through operating leverage. So when we grow our business from 800 to 1,000 and beyond, we're not going to be increasing the fixed costs in the same proportion because we have the capacity in the plant. And therefore, we will see an expansion of EBITDA margins taking place from 16% that we have, plus minus 16% plus this year, at least 100 basis points increase next year, at least.
17% in FY24, at least, is what you're expecting. Can you tell us about you spoke about the big opportunity in the railway segment as well. That continues to be a growth driver. The motor business is very small right now, but you are seeing more growth to come in because of the higher spending in railways. What was the contribution this quarter? 40 to 45 crores is the earlier run rate that you've spoken about. How much can it increase to in the next year?
So at the railways business, we have one big order with a major international player who's building the large locomotives for the Indian Railways in Madhepur. So that's about 40-45 crores per quarter. Now, that's going to be a steady 45 crores per quarter for the next 5 years. Additional business that we can get will depend on whether they win the next job, next contract, next tender for the next 1,000 locomotive, which is out in the market. And, there are one or two players who are bidding for that. So if our customer wins, then we have the opportunity to get that order, which will then double our sales, which will go from 40 crores per quarter to 80 crores per quarter. In addition, we also are in the process of getting our motors approved by the Indian Railways. There will be direct sales to the Indian Railways. It's a 6-month qualification period. We are 1 month into that. We're going to wait 5 more months. And if that succeeds, then we can see around 25 crores per quarter coming in direct from the Indian Railways business. So if everything works out well, we can move from 40 to 100 per quarter if everything works out well.
Thank you very much, Nikhil, for joining in. That's the word coming in from TD Power. It's been a strong quarter and the company is optimistic about the way forward as well. Order wins have been strong. They, in fact, are saying that FY23 order inflows could exceed their earlier guidance of 750 crores and inch closer towards 800 crores. And they are guiding for 100 basis points improvement in their margins for next year. Slip into a very short break. We'll come back and get you more on the market. Stay tuned. Welcome back. Let's get to our segment, Midcap Spotlight. Sonal, you're tracking Manali Petrochem. Is it on numbers?
Yes, it is on numbers, and Q3 generally, Reema, was very weak for all the petrochemical players because raw material prices are higher and they could not pass on the finished good prices to the customers, and that's the reason across the board petrochemical companies have not reported good set of numbers, and that's the case with Manali as well. Now in Q3, revenues are down by 17% on a quarter-on-quarter basis. EBITDA is down 73%, leading to a margin compression of 440 basis points, and profit after tax is also reduced by 74%. Now, as I said, and the company says the same thing, that margins had been falling because there was continued increase in input costs and steep reduction in output costs, and that is something that impacted the numbers. Decline is also due to increased competition, and they also saw inability to rise prices and pass it on to the customers. However, they are hopeful that they have acquired a company in the UK that is called Penwhite, and that is something which will aid their margins because of a differentiated product profile as well. Now, this company is a manufacturer of propylene glycol and polyols, and this is where there was steep pressure as far as raw material prices are concerned. They acquired Pen UK back in November 2022, which is a market leader in foam control agents. They make products like lubricants, its surface coatings and silicone emulsions as well. That is something which is expected to add to their margin profile. Additionally, the general consensus is that petrochem cycle that has bottomed out now and it will continue to improve from here on. So these are some things which could work for the company, but for today, it is definitely a miss as far as numbers are concerned, and the stock is lower by 9%.
Okay, that is the word coming in on Manali Petrochem. Let's now talk about MRF. The company has delivered a strong revenue on the top line, but margins have not improved to the same extent. Sonia joins us for more details. Sonia.
Well, thanks a lot for that. So, the numbers are not too bad. If you look at it, even on the top line growth, right, it's a steady 15% growth that we've seen. Of course, the expectation was an 18 to 20% growth. So, in that context, the growth has slowed down a bit on the top line, and that could perhaps explain why the stock is under a bit of pressure, down about 4% odd. The company said that there's very strong replacement demand. The margins are steady at around 10% due to the price hikes taken and the softening of raw material prices. And the core EBITDA went up almost about 14% at 562 odd crores. The expectation that Motilal Oswal had put out was 549 odd crores. So in that context, the EBITDA performance has also been pretty decent. Even if you look at the margins, in the preceding 2 quarters, the company had done margins of anywhere between 8.2 to 8.5%, and this time it's improved to 10%. So that's something that the street may have liked, but nevertheless, the stock is under pressure, coming in for some profit taking today. The revenue growth slowdown is something that may perhaps have disappointed the street. A 15% growth is what we've seen in the top line compared to an expectation of 18 to 20%. Back to you.
Thank you very much for that. The stock is down 4%. But as we wind down in this edition of Midcap Radar, we'd like to take this opportunity to thank all our viewers once again. We've beaten competition on budget day with an 89.8% viewership throughout the day. We've also emerged as leader with an 88.2% viewership during the finance minister's speech. So a big thank you to all our viewers for your continuous trust and patronage and keeping it with CNBC TV 18. It is indeed a proud moment for all of us here.